What is the highest quality financial planning advice? What's the highest quality advice that you can get? So in our last video last week, I asked a question, just what financial question is on your mind? I was basically asking all of you readers and watchers what topics you'd like me to talk about. We got a few questions about what the highest quality financial planning advice is, and about our services, why we do them the way that we do it. What I can tell you, the short answer is, it's all, we designed everything in order to provide you with the highest quality possible financial advice. So what we're going to talk about today is, why is a written financial plan the most effective for you? When should you get your financial plan? The benefits of fee-for-service financial planning as a method, the difference between fee-only and fee-for-service financial planning, why we only offer financial plans and full service and we don't offer other types of services, what is the highest quality financial planning advice, how can full service with portfolio management be unbiased? So that's what we offer. And people who ask, why is that still unbiased if we're offering the portfolio management? How have our portfolio managers performed? I'll be able to show you. And are our fees worthwhile for you? All right, so for the highest quality financial planning advice, the first thing that you need is a comprehensive written financial plan. And that really is the key. And it's much more beneficial and much more important than you may realize. So first of all, it's important that you actually pay for financial planning, as opposed to having somebody trying to do it for free, which is probably worth what they're charging, or they're being paid by investments, which means that they may be biased in some way. It's important that you pay for it, so you're actually getting unbiased, the highest quality of advice. And so having the financial plan, it's such a vital first step. So basically you're deciding on your life goals and work out the optimal path and methods to get there. So that's kind of what we do in a financial plan. We help you decide what are your life goals. We try to figure exactly what's the best way to get there, taking into account investments and taxes, your cash flow and everything. And our process we call it interactive, because in one meeting, you'll be able to go through many different possible scenarios and decide what's really right for you. And it's only when you see the numbers that you can understand it. So, like, what if I want to retire a bit earlier? What would I have to do? You have to save more, you have to do something different. So what would I have to do? And once you see how much difference it is, so if I work one more year, then I have an extra $5,000 per year to travel for the rest of my life after I retire. Is that worthwhile for me? So it's when you see the actual numbers, you can make real life decisions for yourself. So, and basically what you're doing is you're balancing your lifestyle today with the lifestyle after you retire. That's the biggest part of the whole planning part. So, all right. So if bold steps are required or desired, this is when in the financial plan is where you decide whether you're going to do them, whether they're the right thing for you, also how big or small to do. We have a fair number of people that do leverage strategies or do something more creative, and you need to decide once, are you going to do it or not, and it can make a big difference in a plan, but you got to make that decision once. And it's only when you make a plan and you see if I do that, how much difference does it make to my future, then you can decide with knowledge whether that's the right thing for you. So, and a financial planner can't actually give you proper advice without a financial plan. So if you have an advisor and they've never done a financial plan, I would suggest to you that it's questionable, the quality of their advice. Some try to do a modular planning or just do some very basic planning and say, we'll do it later on. But then how do you know that it's right for you? So your financial plan is your GPS for your life. So having no plan is kind of like starting out on a trip and you just get in your car and you drive somewhere. So I actually had an aunt and uncle that used to do that. They would just actually just get in the car and start driving. And, they'd pull out of the driveway and east or west. So basically they had no destination and they had no map, they had no GPS, they just started driving. So, well, you're never going to get to where you want going that way. So a plan, you decide on your goal, you figure out the best way to be able to get there. And so now if your advisor's done some, trying to do some modular planning or something, what happens is it's not integrated. And without a plan, you know, you don't like, well, I mean, one of the things that I commonly see is people tend to invest way too little, or they invest way too conservatively, so they can't possibly achieve the life that they want, but they don't even know it, right? Even though they have an advisor that hasn't done a plan for them, the advisor doesn't know it either because they haven't done that plan to see what it is that you're trying to do. So it's really critical to have that financial plan, and it's got to be unbiased right from the beginning. So now, when should you get your long-term plan? When should you get your financial plan? And that's actually a really interesting question, because I've had people starting out saying, like, at what point should you get it? In fact, I even had older people saying, when should I get it? So really, it makes sense as soon as you are into your long-term lifestyle. And the reason is because it's, if you just graduated, for example, we talked to some people that have, just graduated from university, just got their first job, still living with their parents. They have a girlfriend, but they haven't, gotten married or anything. They don't know where they're going to live. So we don't know what the long-term lifestyle is going to be. It's really hard. Like, we can set an approximate goal, and we usually do a short education just to see what a financial plan might look like. But the truth is, you can't really there's no point in doing a detailed plan at that point in your life. So we offer a thing called plan discussion for people like that is, they're not into their long-term lifestyle, or there's major changes about to happen or going to happen in the future that they don't know. They don't know how it's going to affect. If there's going to be changes and you know what they're going to be, we can plan for them all. But if you don't know how it's going to work out, then it would be too soon. But once you're in your long-term lifestyle, so most people, for example, once they're into their once you've bought your first home, for example, or you're kind of into the career that you want to go, that's probably already early enough. So if you're a bit older, in your 30s and 40s, 50s, there's no reason to wait. You should get it right away, and I think the sooner the better, because time is really important in being able to achieve your goals. So now we offer this plan discussion only for people that are going to be full service with us, that are going to work with us. And actually, the reason for it is because if we sit down and just talk with you and don't actually write a plan, and then you go off and do it yourself, so we haven't written anything, you're not going to work with us, there's really minimal benefit to doing that. So, however, but if you're early in your career, you're having into your long-term lifestyle, then what happens is we can help you educate and get you started, and then we just start in a direction that's generally in the direction, roughly where you may need to go down the road, and we're just starting off, and we're working together to do it, and then we'll actually do the planning at whatever point of your life that it makes sense. So plan discussion is only for people that intend to work with us to implement it. So instead of writing it, we're just going to work it out together. So now the fees we charge for our financial plan, I think are actually really reasonable. In fact, we spend a lot of time preparing a plan to do it properly, to really give you the highest quality advice. We have a team involved, and it takes a lot of time. So, really, I think it's a great deal of what we charge. So we charge $5,000 for a comprehensive financial plan. You can get $2,000 back if you become full service afterwards. So then it will only cost you $3,000. And for more complex situations, like if you have a corporation, we charge an extra $1,000, $6,000, because it really takes more time. And there is really we only do that if there's a benefit to you of having that more complexity, that you're going to use the corporation in your financial plan. So now our whole process is interactive. So we go through various lifestyle methods with you. Then we sit down, and then our team gets together and brainstorms what is the best possible way for you to do everything. Then we write out your plan, and that's what you actually get. So the first meeting, we have one long meeting where we kind of plan everything, and then it's an interactive meeting. Then we do brainstorming. Then we write out the plan, and then we meet again to go through it with you. So in total, we probably spend about 30 hours between all of our team members in the setup and the whole process. And so I think it's really actually a good deal. In fact, I've been thinking about whether we should be charging more, but we're trying to make this, reasonable for everybody. And the benefit of it is really massive. If you think, it's the difference between, like, most of our clients, once they do the plan, they're actually doing things quite differently from what they were doing before. And plus, they just have this confidence. They now know you know where you're going and what you got to achieve in your life. So that alone, you're doing all the right stuff, and you know when you're going to retire and what lifestyle you're going to retire on, and exactly what you have to do, and all that. It's actually totally priceless for it. And I think for most of our clients, if they look back a few years later, the benefit to them of working with us was many times more than what the fee was. So now let's talk about the benefits of fee-for-service financial planning versus, just a regular advisor. So first of all, the big thing is that you get actual planning. So you're paying for a plan. It's not a free plan. You're paying for it, and you're getting unbiased, comprehensive advice. And like people are going to charge you for a plan. We charge you for a plan because that's actually going to be a plan, right? So we can't just give you some sort of a fake plan. Now, a lot of what's out there, we call them fake plans. So an advisor will give you like just kind of a quick plan. It's really like, what I've seen, it's a document that says financial plan on it. It's got your name, but really it's a marketing document about why you should invest with them. And you go to a bank, and some places what will happen is you go in and they'll do a customized plan, personalized, not a personal plan, but a personalized, which means they just took some software, put in your name and address and a few numbers, hit print, and there's your plan. But it's not a real plan. Like it's not you haven't figured out what your goal is. So, and even fee-only planners, like we've actually written a few financial plans for people that went to a fee-only planner, paid for a plan, got the written plan, and said, that's not what I want to do. What happened is a lot of the fee-only planners, what happens is you go in and you have one planning meeting. It's not interactive. You have one meeting, you set a goal, right? You decide on a goal and you have your situation, and then you go away. And then a couple of weeks later, they mail you a plan and it says, oh, you're 30% behind on your plan, you can't achieve it. So, well, but they should be able to figure that out in the plan. And what should you do about that? Do you change the goal or you do something different? So it's we call that a one option plan. You get a plan mailed to you later on with one option. And the problem is at the end of it, so when you have your plan, the important thing is you needs to actually answer your life goals. Like, what are your life goals? What should you be doing? And if you don't know that, then you don't have a real financial plan. So, part of it is there's a book called What is Your Number? And your number is, what is the amount of investments that you have to be financially independent and be able to live the rest of your life with the lifestyle that you want. What is that number? Of course, it makes a big difference if you want to retire on $2,000 a month or $10,000 a month, or if you want to retire at 50 or 65. It's a very big difference. But figure out what is, and then how do you get there? So how much you have to invest every per year? What strategy should you do? So it's basically that unbiased advice. The big thing about fee-for-service financial planners is they don't sell products. Okay, so you're getting unbiased advice. They're not trying to sell you anything. They're just giving you the financial planning advice, and that's why it's really so important to be able to do it. So now, so most people that there's like 100,000 people in Canada that call themselves a financial planner. Now, most of them are they sell mutual funds, they sell insurance or something, and they call themselves that. But really, they do the minimal amount of financial planning. They're just trying to sell you investments, and that's not what you need. And even if they do some planning, it's designed around selling their investments or their method. And it's not really all about your financial plan, what you want to be able to do. So, and the important thing is, since they're recommending their own investments, the question is, how do you know it's unbiased? So the number two problem in the investment industry. So the number one problem in the investment or the financial planning industry is most advisors don't actually do real financial planning. And so people are just wandering aimless, and they don't even find out until they retire that, oh, this is nowhere close to enough. Now what do I do? They're 65 and retiring. They realize, oh man, I got to cut back. Well, they should have known that 30 years ago when they could do something about it. So now the number two problem in the investment industry is in-house products. It's also called proprietary products. So your advisor works for one company and they're selling their own investments. And even if those are the best investments in the entire world, which is highly unlikely, because no one company has all the best investments. But even if they are, how would you know? How do you know they're not recommending it because they're getting some preference or it's their company, right? So the general advice that I have for people is never buy investments from the same company that does your financial planning. So whatever your advisor's company is, don't buy investments from that company, because how do you ever know if it's unbiased? All right, so after you have your financial plan, so that is the real important first step, okay? From there on, we thought about what to do for ongoing service, and we thought about having just, like an ongoing fee of some type, or annual retainer or something like that. But once you think about it, we realize it's actually significantly lower quality advice to be able to do it that way. And let me explain that, because it takes a little bit to understand. So if you get your financial plan and then you go off and do it, so when we write a financial plan for you, if you want, you can just take that plan. It's all the details are there. You can go off and do it yourself. So, or you can implement it with us, and we'll work with you over the years to do it. Okay. Now, so we don't offer, if you choose to do it yourself, we don't offer any ongoing advice of any type. So, and we do that on purpose, just because we only have limited time. We only want to provide the highest quality advice, and the highest quality advice is writing the financial plan, creating your plan for you, and also the full service. So, and those are the areas where we make the really big difference. So that is really all that we offer. And let me explain why that is the highest quality. So the difference here on an ongoing basis is it's the difference between fee only and fee for service financial planning. So what is the difference? So fee only planning, the only income that the advisor gets at all is an hourly or a per meeting or per engagement fee, and they'll charge you for a meeting or for writing a plan or something, and that's all that they do. Now, fee for service means you can get fees in different ways, but basically it's about providing a broader level of services, and but you're never paid commissions or incentives, or never paid by the product company. You're always paid by you always pay them, but from one way or another. Okay, so now I'm to show you this difference. So the difference between fee only and fee for service, and also about ongoing advice. So I'm an accountant, and as an accountant, there's two main types. There is the this like the CMA, this management accountant. That was what I was for many years. So a management accountant works at a company all year, and they help the company work through their finances. Okay. Then the chartered accountant comes in at the end of the year. They're the auditor. They audit the books. They create a financial statement, and they give you an opinion on it. So, and that's the difference. So management accountant versus the year-end auditor. And that's really kind of the difference between fee for service and fee only. So, or at least between our full service and let's say having an ongoing retainer style. So now, if you have an ongoing retainer style, what's happening is the advisor isn't actually thinking about you during the year. So you have your initial financial plan, right? They create a plan for you, and then you're going to have we'll have a couple of meetings or one more meeting during the year, or whatever is included in your engagement with them. However, they're not thinking about it on an ongoing basis. They're not thinking about you, except like they've paid for, I don't know, 5 hours a year of time. That's the 5 hours that they're working with you, and the rest of the time they're not even thinking about you. So, and the other thing is, so now when you have your review meeting with a planner, a year later, you have to give them all the updates. You got to tell them your cash flows. What's the value of your investments now? How much, what contributions have you made during the year? What's your income, your taxable income now? And then they can do a plan update. But you got to give them all that stuff. They don't know it. They're just kind of the year-end auditor showing up at the end of the year. Now, the difference with our full service, and I just want to make you understand why this is so much higher of a quality of advice. So we work with you all year to help you and walk with you to be able to achieve your goal. All right. So we take the initiative to contact you. So if we know what actions you need to do throughout the year for your financial plan, and how much you need to invest, and what stage you're at, and we take the initiative to contact you. And we're thinking about you all year about what you need to be able to do to get to your plan, and if you're behind your goal, what else can you do, and all that. So now, we track all of your rooms, and actually you should see what this looks like. So we have, for all of our clients, for our full service clients, we have a spreadsheet that show, we have a RSP spreadsheet where we track your RSP room and how much you put in, and you have a group plan, and so we know how much your RSP room is. You don't have to figure it out. We know what it is. Same with TFSA, RESP. If you have a RIF, we know how much money you're withdrawing. We were looking at your withdrawal rate, and we know what the minimum and maximum RIF is. And then if you're doing a strategy like the Smith maneuver, we have all the details. We know what mortgage you have, what payments, how much principal you're paying, and where, how that money is being used in the most effective way. And so we have all these in big, complex review spreadsheets, so we know in detail where your situation is, and we're following it all the time. So also, you know, tax planning wise, a lot of our clients we have a tax plan that's part of the plan. Okay, and for example, we may set a target marginal tax bracket, and they need to put, for example, enough RSP, enough deductions to get, for example, to 50,000 or 100,000 to get to exactly to a tax bracket break, but we don't want to put more in or deduct past that point. So we know exactly how much needs to be contributed throughout the year, and we track that. So we know what the target is. We know how much you're putting in. So we're tracking it throughout the year. So what that means is the other thing we do is we also help you with all your financing. So if you're doing Smith maneuver, or even if you're just buying a house, we can help you get the best mortgage or the other loans or credit lines. We've got a lot of experience in that area. And you know, we're independent, so we're not with any one bank. You know, you go to one bank advisor and they'll talk about their bank, but we know all the different banks and the different sources. And you know, for example, even mortgage brokers are independent. But you know, for example, we have a fair number of people doing Smith maneuver or some leverage strategy like that. And for that, there are 8 Smith maneuver mortgages available in Canada, and mortgage brokers can only get 3. So we can get all 8, and we actually know the pros and cons of all 8, so we know which ones are the best choices for you. So it's so we're helping in all these different areas: your planning, all your contributions, your taxes, your financing, all that part. And we end up talking to you a few times a year. Okay, so we do a full review once a year. We talk to you, for example, at the RSP deadline, at the TFSA deadline, for the RESP. If we're doing your tax return, we're talking to you at that time when your mortgage comes due. And plus, we have a list of actions that you need to do in your financial plan. So we may contact you about all those things. We're following up on that stuff. And plus, we're your financial guru. Any financial question that comes up, anything that happens in your life, you can contact us right away. And so the big difference also in full service is we're there for you when things happen. Okay, so your job changes, your cash flow changes. We're you don't have to worry about calling it. So fee only. If you call them up, you're on the clock. How much are they going to charge you for doing this? So should everybody call them and stuff. So for us, we're already there. So you call us anytime. Your job is changing. Your family life is changing. You're splitting up with your spouse, or you're getting married, or something, or you're moving. So let's talk about how that affects all of what you're doing. So yeah, and so we're aware of what's going on in your life. So this ongoing advice, it needs to include the investment management. Actually, it's in order to be the highest quality advice, it needs to be able to include it. Okay, and that's the part where people sometimes, well, if you're having the investments, doesn't make you unbiased. But what I found is, if it needs to include it to be the top quality of advice. Okay, and the reason is we need to be able to know that the investments that you have are suitable for you to be able to achieve the life goals that you want. So are they suitable for what you're doing? So, and we see every transaction that you do, we know we see what's happening with it. So you're making an RSP contribution, and we'll you know what? So you've been contributing spousal because we need to provide that much for your spouse, to a spousal RSP. But now this should be to you, or it should be to your spouse's RSP, because you've put in enough to get you to the lower tax bracket. And so we're looking at, with every transaction, we know where all that is. You know, so without the investments, we wouldn't know all that stuff. So every transaction, we have specific advice on which account it should go to, and all that. So now, and if you're behind on your financial planning goals, we're thinking about you all year. We're thinking, like, what else could we do? How are we going to get caught up on this? Do we have to change our goal, or should we do something different? So that's all that's happening. So the other really big thing when we're involved with the investments is we can help you avoid what's called, the big mistake. So now number one investing mistake people make is what we call the big mistake, which is selling when you're at the market bottom. Okay, and that's, so if this year has been a down year, most of our clients are actually very growth oriented, and whenever the market's down, they think, oh, it's a great buying opportunity, let's try to get in what we can. But we get the odd person that gets a bit nervous, and you know what? So then if they're on their own or something, or some other advisor might say, well, let's switch out because we want to, let's switch to something conservative until it recovers, and that's what a lot of advisors would tell you to do, and that's what your gut may tell you to do. But you know what? That's the biggest mistake. Because what happens is you're only going to get back in after the market is, more solid, which means it's quite a bit higher than today, and you probably lost. You probably buy back in when it's 20 or 30% higher than today. So it's hard as it is, the smartest thing to do when things are down are stay with your investments. If they're the right ones, they'll recover over time, or even try to put more in, take advantage of it while you're low. And because we're there with you, if you panic and want to sell, you call us, right? And we're there to say, you know what, maybe let's just talk about this. So now again, it's your money, you can do whatever you want, okay? But the fact that we're there is we can help you avoid making these mistakes. So now, the decision that we came to provide the highest quality advice. So full service is the advice that people need. It is the highest quality of advice, and that's why we designed this full service. After you do a financial plan, we work with you full service, and we're trying to provide the highest quality advice that we can. So, and we need to see the investments in order to be able to do that. And that's why we get involved in that part of it. We want to make sure that that's a vital part of the plan, is all the investing. We want to make sure that is all working for you. So now I'll give you a really important thing is, so we've written like over 1,000 financial plans, and I have this on a bunch of my videos, is, most advisors that you go to, they will say you need, some growth, some defense. So you get a 60-40 portfolio, maybe 60% stocks, 40% bonds, and it's a balance. So it grows, but it doesn't drop too much. The problem is a portfolio like that, probably a reasonable long-term return expectation is like 5% or something like that. And almost nobody can retire comfortably with a 5% rate of return. Inflation is, long-term average is, let's say 3. It's the high end of where the bank is trying to, the central bank, the Bank of Canada is trying to keep inflation. So if you got inflation at 3 and your investments are making 5, you're hardly making any difference. And so as soon as you are working with a regular financial planner or a bank, and you're in this kind of portfolio, you basically have no chance of having the retirement that you want. So that's part of, we want to make sure that you actually get a proper portfolio here. So also,